Hi guys, my name is Zach Connor from Logan Graham and Connor Accountants. I'm a CPA in Tipton, Indiana. We're going to add one more video to YouTube about this payroll protection program, and we're going to dig into it. Three points I want to make in this video is what's the intent of the program. I'm going to try to beat it into you guys that you need to spend the money in the 8-week period, and we're going to talk quickly about the deductibility of these expenses on your tax return. Let's start off with how this is calculated. It's your average monthly payroll. You're multiplying it by 2.5. You're going to get your loan amount. Okay, let's push this loan amount and go into the 8-week cover period. You get your money. You have 8 weeks to spend it to get it forgiven. What that equates to is you take the 2.5. That 8 weeks is 2 months. You have 2 months of payroll, so the remainder, the 0.5 of the equation, is going to be spent on rent, mortgage interest, and utilities. Okay, it's pretty spelled out in the interim final rules. Yeah, there are some nuances and questions that are out there, but we got some rules in front of us, and we need to utilize them the best we can. New York Times came out with an article May 2nd that's titled, "Some Small Businesses That Got Aid Fear the Rules Too Much to Spend It." It goes on to a number of businesses that got the PPP money and aren't spending the money. An example is Blazing Fresh Donuts. Looks like in Connecticut, this business owner got $50,000 to hire back 8 employees, but she said she'd be paying them to stay home since the bakery is open only 12 hours a week. She would prefer to hold on to the cash beyond 8 weeks. Her hope is that it becomes a low interest loan she can use for payroll and rent when her shop is open. Okay. See, there's a couple words in there. Her hope. There is no hope. It's already written. If she doesn't pay employees during this 8-week covered period, it won't get forgiven, and it will become a loan, and it will have interest on it at 1%. The term's at 2 years. So she got $50,000 to pay back in 2 years. Okay. Whether she paid that to them in the 8-week cover period, it could have been forgiven. Okay. Yes, she's not paying them while they're at work, but now you have a $50,000 loan. Her other option, after the 8-week cover period, pay it back. But it didn't help. And that was the intent, in my opinion, of the whole PPP program, was to, as a conduit, use small businesses to pay employees and not use the unemployment system. Okay, that's where it became a pass-through to employees. The money is given to the employer, it's paid to employees, and a little bit went to the business owner. What the business owner really got was an administrative nightmare to keep track of all this stuff, to pay employees. Okay, it further goes into her. She's contacting the SBA, and the SBA is telling her follow the purposes consistent with the payroll protection program. So follow the rules. They're already there. They're already there, guys. Actually, when this was written, a few days before it was notice 2020-32 from the IRS was given out that describes all these rules once again, and then goes further into, hey, what are these expenses? The payroll, the rent, are they going to be deductible on the tax return? Okay. Section 1106 is the CARES Act, and it goes in the notice and talks about the 8-week covered period, payroll cost, any payment of interest on a covered mortgage obligation, any payment on any covered rent obligation, any covered utility payment. Okay. It goes in there and says, hey, if those are forgiven, the IRS won't tax the money, right? So federal income tax consequences resulting from federal covered loan forgiveness. What they're saying there is that money will be excluded from gross income. When money is on debt obligations in the IRS tax world, when money is no longer, when the debt is forgiven, it becomes discharged debt or income to the taxpayer. And the IRS says, hey, that's not the intent of Section 1106. The intent of the PPP loan portion of the CARES Act was, hey, hey, this is not going to be taxable. The forgiveness amount will not be taxable. I had a lot of questions of people kind of worried that, hey, this forgiveness, it may or may not happen. It's written in these rules if we follow them. Yes, we may not know what exact utilities we can do, but we know that this forgiveness, if you utilize and you follow the parameters of the full-time equivalents, you don't pay anybody under 25% of their wages that you did before, and if you meet the exclusion to get everybody back in place by June 30th, it may all be forgiven. What goes into question is the deductibility of these eligible 1106 expenses. What's kind of funny here is when I talk about the pass-through, we got all this money to the employees and it comes back to us, and now we get, oh, we had $50,000 and now it's forgiven. Do I get to deduct the payroll cost? Well, under Code Section 162, payroll cost is an ordinary necessary expense. Yeah, you get to deduct it. Under Section 163, mortgage interest, yeah, you get to deduct it. But there's this other little code section, 265, and for the purposes of this, it's saying it doesn't allow you. The purpose of Section 265 of the code is to prevent double tax benefit, meaning if you didn't have to pay tax on the income that you got, that income that you got to use to pay expenses, you can't deduct it. And it makes sense. And the IRS goes into multiple court cases where people have tried to deduct expenses on income that wasn't taxed. It doesn't fly. In fact, in bold print, non-deductibility of payments to the extent income resulting from loan forgiveness is excluded under this section. Okay, what's really cool out of all this is the story doesn't end there. Gosh, what's the date of this? May 6th. Senators introduced a bill to allow tax deductions for forgiven PPP loans. Okay? What they're saying here is a senator saying Treasury guidance barring deductions for expenses paid by PPP loans is a gut punch for businesses struggling to stay afloat. It defies common sense for Treasury to provide help on the front end, but then take it away on the back end. The logic on that was, again, it was just a pass-through. The business isn't really getting a significant amount of help if it's just getting money from the government, paying employees, and it's forgiven. Okay, that's their thought process. The IRS is saying no. I mean, it's double taxation, or you're getting a double benefit from it. The AICPA is going into it and supporting this bill too, where it is clear that Congress intended to allow a full deduction for PPP-related expenses. I would say no, it wasn't clear. It wasn't clear at all. Congress probably needed to spend a little bit extra time on the 1106 section before getting it out to help taxpayers know exactly what they were getting into. But what we know we're getting into now is we have the rules. We know what our loan amount is. We know exactly when our loan period starts, when we got the money. We need to use it for payroll. We need to use it for rent. And we need to use it for these items, okay? Get with your tax advisor, your CPA, to see some nuances for that, but you need to spend it. I have clients in the fourth week already, halfway through. My other big piece of advice is keep records. Records. Dot your I's, cross your T's. But the intent was there to pay employees, so pay them. If you don't have as many full-time equivalents as you did in February 15th or earlier in the periods that are used to calculate, yeah, your loan forgiveness may be reduced. The opposite end, though, you're just going to pay back what you didn't utilize. So if you have questions, feel free to give us a ring. But thanks for watching. Thanks.